Ladies and gentlemen, boys and girls, welcome to a long-awaited order flow explained video. Now, everybody has been spamming me in the comments to make this video, so if this video doesn't get a million views, I don't know what I'm gonna do. I might just have to come to your house and touch you inappropriately. So with that being said, hopefully I have some workers at the crib right now that are like drilling holes in my walls and shit, just to like try and look at me through a peephole. So hopefully they're not making too much noise. But with that being said, let's jump right into this. Let's get into the charts and just break down what order flow even is, how we can use it, how I use it to identify daily bias, and on top of that, how you guys can use it to win fucking trades. So first thing that we want to do is understand what is order flow. So I talk about this all the time, and honestly, it's literally just a fancy ass word that people like me like to use to make you guys confused and think that you need to see another video. But it's literally just trends. But don't get off the video because I'm going to explain this a lot better and way more in detail than just it's an uptrend or it's a downtrend. There's a lot of different things like disrespecting bullish order flow or respecting bullish order flow or having a potential change in order flow and all of these things that we're going to show on the charts. But essentially order flow is just what trend we are in. Are we in an uptrend or are we in a downtrend? Okay, so how do we identify it? How do we identify bullish order flow? By literally just looking at the most recent break of structure. Like that to me is super easy. Just look at most recent break of structure, or just look at, I was about to say order flow, or just look at the most recent highs and lows that were made. Or the most recent highs and lows, because as we know, this is the first step of order flow. Bullish order flow or uptrends move in higher highs and higher lows. Yay, we're literally teaching kindergartner subjects here. Kindergarten shit, and y'all are asking for a YouTube video on it. Ridiculous, man. Anyways, bearish order flow is what? Lower lows and lower highs. And with that being said, if you guys want to learn more about this, go ahead and click the link in the bio to get the day trading blueprint where I teach you guys stuff like this for $1 billion. Buy my course, please. And thank you guys. Subscribe. I'll catch you guys in the next one. Peace. I'm just kidding. But this is the start of it. Okay, so downtrends move in lower lows and lower highs. Uptrends move in higher highs and higher lows. So in order to identify bullish order flow or bearish order flow, we just look at the most recent highs and lows. Okay, we see, boom, we're making higher highs and higher lows. What are we in? Bullish order flow. If we're making lower highs and lower lows, what are we in? Bearish order flow. Now is when we get into the advanced shit, like how do we identify disrespecting bullish order flow or disrespecting bearish order flow. And there's three main confluences that I use to identify these. So let's talk about the confluences to identify disrespecting order flow. Disrespecting order flow. I use break of structure, I use inverse fair value gaps, and the 79% extension on the fib. Okay, so as we know, again, absolutely kindergartner subjects. Well, no, some of you guys are kindergartners. In that case, I will not come over to your house and touch you. I'm already banned from doing that. I'm kidding, that was such a bad joke. Fuck, I don't even have an editor editing this, so we're just gonna have to leave that one in. That was not a good joke, bro. I'm sorry. Don't clip that or anything. Skip to the next one. Indians don't shower and they reek. Okay, boom. That's a perfect one. Use that one. You're welcome, clippers. Okay, so first one, break of structure. How do we identify break of structure within an uptrend? We find the most recent low that was made and we need a candle closure underneath it, okay? If you guys want to learn how to identify break of structure better, I have literally a quadrillion videos on it in my bootcamp, in my trading transformation, okay? go watch those to identify break of structure. But essentially, we see price come down, we close underneath the most recent low, boom. That is one form of disrespecting bullish order flow. Why? Because we're literally closing underneath the uptrend. Okay? The next way that we can disrespect order flow is if we have a bullish fair value gap right here and we close underneath it, causing an inverse fair value gap. Okay? And if you guys don't know what an inverse fair value gap is, I'm going to show you guys some examples on the chart. I'm also going to show you guys examples of break of structure on the chart. I'm also going to show you guys examples of the 79% fib extension, but I have videos on both of these in the boot camp and the day trading transformation, okay? So if we get an inverse fair value gap within an uptrend, disrespecting a bullish fair value gap, what are we doing? We're disrespecting bullish order flow. Why? Because if we were to respect bullish order flow, we would come into that fair value gap and then we would just move up off of it. But when we don't do that, what are we doing? We're disrespecting bullish order flow. Now, last but not least, we have the 79% extension on the Fibonacci. So all we do is we draw it out, just like we were to draw out equilibrium. We see we have the 79% extension right here. If price comes down and moves past the 79% extension, to me, that's disrespecting bullish order flow. And we are eventually going to come down and break structure or inverse a fair value gap if there's anything underneath here. Okay, I rarely use this one. I just recently taught this to the Blueprint students because I used it in one of my trade recaps and they were all freaking out about it. Honestly, you guys can like very well do without this shit. I just wanted to add this in here because I use it in one of my trade recaps and everybody was freaking out about it. Okay, so those are the 3 ways that we can disrespect order flow. Now, same thing in a downtrend. How do we disrespect bearish order flow? We get what? A break of structure to the upside. How do we identify a break of structure to the upside? We see a closure above the most recent high that was made within the downtrend. We get an inverse fair value gap. How do we see that? We look for a bearish fair value gap that gets closed above by a candlestick. In turn, that disrespects bearish order flow. And last but not least, we take it from the high down to the low. And then if price pushes past the 79% extension, it's pretty safe to assume that bearish order flow has been disrespected. Cool, cool. So now, how do we show that order flow is being respected? Because not only do we need to know how to identify bullish and bearish order flow, we also need to know how it gets disrespected, and then also, how does it get respected? And we're gonna put all of this together onto the charts so that you guys can become profitable traders. But first, hold on. I'm getting thirsty. Let me hit a chug jug. Oh yeah. God damn it, man. That bottle's never getting picked up for like the next 5 years, swear to God. That shit's way behind my desk. I'm never picking that shit up. Okay, how do we respect bullish? Wow, I'm wide awake now. Shout out Santa Cruz Medicinals. Just kidding, I didn't use any of his electrolytes. Wow, we're geeking today. Jeez, man. Okay, how do we respect bullish order flow? Let me try and remember. Hold on. I gotta watch a YouTube video on this really quick. Hold on. Hold on, let me find this video just so I can remind myself really quick.
Ever heard of Jerkmate? It's as fun, entertaining, and addictive as the most popular social network.
Hey! Okay, now that we know how to respect order flow, I'm going to put this together. Okay, so how do we respect order flow? With fair value gaps, with order blocks, with breaker blocks, with equilibrium. What else? That's pretty much it. Or like OTE, but we don't need to do that shit. This is all you need. So how do we respect order flow? When we're in an uptrend, what are we doing? We're respecting order flow. We're either hitting equilibrium, filling fair value gaps, filling order blocks and breaker blocks, all that shit. So how is this useful? Now that we know how to, and again, if you guys don't know what a fair value gap is, an order block is, a breaker block is, equilibrium, go watch my bootcamp. I cover all of that. And also, if you just want to learn from me directly and genuinely like be my student, get coached by me for like 2 months straight, there's a link in the description. You guys can become a Blueprint student. We literally pass, we have like, I can show you guys right now on my Discord, bro, we pass around like, we average 3 to 4 funded accounts passed per day from students, which is just like fucking berserk. I literally dare any other mentor to have that much success with their students, like ever, bro. It's like, I've never seen that shit before. And I've been in the trading space for a minute. But anyways, if you want to know how to identify fair value gaps, order blocks, breaker blocks, equilibrium, okay, watch a bootcamp, watch Trading Transformation, and if you want to learn from me directly, there's going to be a link in the description to join the Blueprint. But continuing on this, now that we know what order flow is, how to identify it, how it can get disrespected, and how it can be respected, how do we apply this to the actual charts? Price action recently has been like actually poopy diaper, but let's just bring up a random ass market open. Yo, welcome to Jerkmate. Yo, who invented that horny ass commercial, bruh? Yo. Let me try and find a good market open. Yeah. I've been watching that shit way too much. Literally my favorite show at this point. Yeah. Welcome to Jerkmate. I'm going to touch you. Yeah. Welcome to Jerkmate. Okay, this is fine. Prime time. Wine and fucking dine. Let me delete this actually. Delete the macro. Okay. So, order flow. When I'm looking for entries, how am I going to use this? I'm mainly looking at the 5-minute time frame. 5-minute order flow, for the most part, dictates like everything for me in terms of where I'm looking to trade, in terms of where I'm entering, and then I scale down to the 1-minute time frame to look for a trade, like look for an entry. So like this isn't my whole strategy, but just to keep this like super dead simple just on order flow, what can we see? Market opens right here. Okay, cool. We're in bearish order flow right now because we broke 5-minute structure to the downside right here on this candlestick. Cool, but that's like 5 minutes into market open. We obviously want to wait for market to move into the macro, move into an optimal time to trade. When this happens at around 9:50 right here, we're not really looking to take shorts because it's like, okay, we're kind of moving up here. Okay, and there's obviously a bunch of other reasons why we wouldn't want to be looking for shorts. We're filling in a high time frame imbalance right here, okay? And that's high time frame order flow, and we'll get into that a little bit later. But we see, boom, 5-minute break of structure to the downside right here. But then following that, what do we get? We get a 5-minute break of structure to the upside. So what did we just do? We formed 5-minute bullish order flow, okay? And we disrespected 5-minute bearish order flow. Why? Because we just broke structure to the upside. So what is that doing? The previous bearish order flow that we were in, we just disrespected it. And now, in order for me to like 1,000,000% confirm that we are in bullish order flow, and newsflash, this is literally how I take trades. I look for the previous order flow to get disrespected. Then I look for new order flow to get respected. So previous bearish order flow gets disrespected with a break of structure to the upside. Then following that, what are we looking for? We're looking for new order flow to get respected. So what do we have? We have a fair value gap here. We can literally draw out every single one. We have equilibrium that gets hit. We have a breaker block right here that gets hit. We have the order block right here that gets hit. Literally every single one of our confluences ends up getting hit. Fair value gap, equilibrium, breaker block, order block, all of that shit gets hit. And then from there, what am I doing? I'm scaling down to the 1 minute time frame. If it even lets me move over here. And then all I'm doing is I'm looking for 1 minute order flow, because on a 5 minute retrace, again, everybody wanted me to make a video on the 5 minute retrace, it's order flow. 5 minute retrace, okay, we wait for the 5 minute retrace. 5 minute retrace typically makes the 1 minute order flow turn into the other direction, okay? So if we disrespect bearish order flow to the upside and then we're looking to get bullish order flow respected to the upside, on the 1 minute time frame, we're typically going to break structure or inverse a gap, whatever. We're typically going to have bearish order flow on the 1 minute time frame when we're looking to respect bullish order flow on the 5 minute time frame. If not, it doesn't really matter and we can take the trade regardless, but typically we get a 1 minute reversal, and then all that we're looking for is just boom, another reversal. And with this, I'm typically never really looking, once we get the breaker structure to the upside or an inverse fair value gap to the upside on the 1 minute time frame, I'm not looking for order flow to get respected on the 1 minute time frame, because if the 1 minute time frame is flipping into bullish order flow or disrespecting bearish order flow, and the 5 minute is already in bullish order flow, and we're getting 1 minute break of structure to the upside off of a 5 minute confluence that's already bullish, that's showing us that like we're respecting 5 minute order flow and 5 minute confluences, then I'm okay taking that trade without needing to wait for a 1 minute fair value gap or a 1 minute equilibrium. I mean, you can see that it would have worked, right? We have a fair value gap right here, and then boom, it ends up getting filled. We would have been able to take this trade, but me personally, I don't have to wait for it. And then boom, take profits, hit, whatever. Target previous draws on liquidity, target fair value gaps, whatever. Boom. Like, that's all it is, bros. Like, straight up, bros, that is literally all it is. Now, how can we use this on the high time frames to help us? So, all I'm gonna say, I made a daily bias video last year, and everybody was making fun of me for it, saying, TJR is such a beginner teacher. TJR is so beginner, okay? He doesn't teach you everything that you need to learn. You know, don't watch his boot camp and that's it. I made that daily bias video saying you want to look at the high time frame trends and identify what point in time we are in the high time frame trend, whether we're going to sweep out liquidity or whether we're going to fill an imbalance to continue the trend. Everybody was making fun of me for that video, saying, this is so beginner. You need to use this. Fast forward 1 year later. Here we are, and every single person is finding their daily bias using this bullshit called internal and external liquidity, which newsflash buckaroo is literally just order flow. And newsflash, order flow is literally just uptrends and fucking downtrends. You got played, bro. You got played as fuck, bro. But anyways, I'm gonna make this daily bias video again in this video, and maybe you guys will fucking listen now. So just like on the lower time frames, when we're identifying order flow, bullish order flow and bearish order flow, disrespections, all of that. High time frames, how do they move? They move in trends. They move in higher highs and higher lows, lower highs and lower lows. Cool. Our job when trying to identify our daily bias is to be able to identify what point in time are we in these high time frame trends. Are we sweeping out like hourly liquidity or lower time frame liquidity to go down to fill a 4-hour imbalance to move higher? Or are we in a 4-hour imbalance to sweep out lower time frame liquidity to move higher? Okay. On the higher time frames, your goal is literally just to identify the point in order flow that we are in. So on the 4-hour time frame right now, we were actually in consolidation. So there's 3 types of order flow: uptrend, downtrend, consolidation. But we just broke out of this. But I already know this because, I mean, I told Blueprint students I wanted this shit to be filled. Told them that shit literally yesterday. Hey man, I'm good at this shit. But anyways, on the daily time frame, what are we in? We're in an uptrend, okay? I know this shit looks like actual like throw up on the chart, but we're in an uptrend. How do I know that? Because I'm literally just looking at the order flow. I know it's hard to identify right now, but high, low, higher high, soon to make a higher low. Or we just dump. But for the time being, we're in an uptrend. So what point of order flow are we in right now? Before today, we were at the high. Now we're going down to make what? The higher low. In what? Well, we have to respect the bullish order flow. So what confluences do we have? Dandy do. We have a fair value gap. We have equilibrium. You could probably find like some sort of 4-hour order block, 4-hour breaker block, whatever. Oh yeah, we do. Boom. 4-hour order block, literally right at equilibrium. We have the breaker right here, pretty much same area as the order block. Boom. So prior to this, what were we assuming that price was going to do? Come down, because we've already made the extension in an uptrend. We've already made the move up. So what comes next? The higher low. And then once we made the higher low, what comes next? The extension. It's crazy that I had to make this video to remind you guys of the absolute beginner concepts that you guys seem to have just lost in translation through all of these nitty-gritty bullshit that you guys have been studying for the past year. It's time for you guys to come back to daddy. And it's time for me to actually put shit on game. Okay? Because I've been trying to teach you guys the right way and the simple way, but you guys didn't want to fucking listen. And now here you are, trading the simple way because you realize the way that I trade actually fucking works. And now, I'm not saying that the way that other people trade doesn't work. I'm not saying that at all. Like, everybody has their own strategy, but I'm just saying you guys are getting lost in fucking translation with all this YouTube bullshit. Cut the crap, stick to what fucking works, stick to the simple shit. Y'all are like, your guys' charts looks like fucking baloney right now, bro. You guys have shit written like this on a trend line that's going up, down, and sideways. Y'all have some shit like that looks like this on your chart, and you label it like this, and then you make fun of a video of me who's literally a profitable trader who shows every single trade that I take on a daily fucking basis and how much I make and how much I lose. And y'all are just like, well, you didn't account for the low fucking, like, buddy, you are trading on a funded account and you can't even pass it. I am trading on a live account worth literally your father's net worth, probably more. Like, who are we, like, what are we doing right now? You're telling me I didn't account for whatever you put on the chart? Maybe the shit that you put on the chart. It's what's making you lose, bro. Anyways. Higher time frames. What are we looking for? We're just looking for at what point in time we are at in the order flow. Do we need to extend to the upside to take out external liquidity? Or do we need to make a higher low and seek out internal liquidity? That's how you guys look, because I literally put you guys on this exact game a year ago and y'all didn't want to appreciate it. I hope you appreciate it this time, because this is the last fucking time that I'm making this damn video. Higher time frame order flow. How do we identify our fucking daily bias? By literally just looking at what point in time we are in the high time frame order flow. So with this, right, we saw, okay, boom, Literally, like, if we just... Come on, man. If we just, like, use the draw tool. Remember when I taught you guys how to use the draw tool? You guys have moved so far from this shit. It pisses me off, actually. It pisses me off how far you guys have strayed from simple shit. Simple shit gets you paid, bro. I'm telling you. If you guys just draw this shit out, or we went sideways for a bit. Boom, 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 boom. What's next? And I can look in uptrend. Sorry, there they go. In uptrends, again, it seems like you guys need a reminder. We make a high, we make a low. We have to what? Push past this high to continue the uptrend. And then what? After we push past that high, what are we gonna come down and do? We're going to fill some sort of fair value gap, some sort of equilibrium, some sort of breaker block, some sort of order block. Once we fill it, what are we gonna do? We're going to push past this high again. So now what can we use these highs as? Take fucking profits. Boom, simple fucking shit, bro. It's simple, simple, simple shit. Let me show you guys an example of this on the high time frame, and then we'll get the fuck out of here. Ready? This is a perfect example, okay? Liquidity sweep, then what? Boom, breaking structure. And oh my God, it's so good. Oh God, man, I swear to God, if you guys, can you guys just please listen to Daddy for like the one time, please, bro? Listen to me. Look. Okay, we break bearish order flow right here. We disrespect bearish order flow, okay? Cool. We get a breaking structure to the upside, okay? Cool. What are we in now? Bullish order flow, awesome. What do we come down to do? Boom, we respect bullish order flow by filling in this fair value gap. Awesome. Okay, from there, we move up, Every time we have a low, we have a high, we have a higher low. What do we do with the following high? We push past it. Once we push past it, what are we going to do? We're going to make a higher low. Boom, we make a higher low. How do we need to change directions? What do we need to do in order to change directions, in order to change order flow? Liquidity sweep. So we still end up pushing past this high time frame high, but what is it to do now? To sweep out liquidity. So regardless, if we see this price move down, and let's say that even though this wasn't New York Stock Exchange open, but let's say that we had an open right here, what would we still be in? We'd still be in bullish order flow. What are we in? A fair value gap. What are we looking to do? Respect this fair value gap. We look for longs up to what? Boom, these highs. Why? Because we're in bullish order flow. And regardless of if we're going to change directions here, we still take out these highs and we still hit take profit. Following that, we break 4-hour order flow to the downside. Cool. Boom, we get a move up. Then, once we make that move up, once we fill in this fair value gap right here, which we just did, and we see entries, where are we targeting? The low. Why? Because we're in bearish order flow. Oh my God, and then what does the low fucking do? It floods the fucking face of the downside. Pisses me off that you guys didn't listen to me a year ago. It really does, because I'm making the same exact fucking video. Same situation on NASDAQ here. Okay, what are we doing right now? We're filling in high time frame order flow. We're respecting high time frame order flow. We're filling this fair value gap. What are we likely going to do in the next coming days? Take out this high. Once we take out that high, what are we probably going to do? There's probably going to be fair value gaps made. There's probably order blocks, whatever. Different confluences for us to come down. And then when we're in those, what do we do? When we're in those internal and external drawn liquidities, okay, all that we're doing is we're going down to the 5-minute time frame and we're executing based on what I just showed you guys. Simple fucking shit, bro. It's so simple. A fucking baby could do it. And that's why I teach you guys the way that I do. If you can't teach shit, if you can't teach something that you're highly proficient at to people as at a kindergarten level, then you're not actually good at this shit. That is like, that. Who fucking said that? There's some like famous fucking philosopher that said that. If you are able to dumb down a concept that you're highly proficient at down to like a kindergarten or a 3rd grade level, then you aren't actually good at that skill. So everybody that's talking to you in fucking big words and all of that shit, first of all, they're not doing you any favors. And you're not doing yourselves any favors by trying to listen to these big words. I've been simplifying all of these big words, all of this bullshit for you guys so you guys don't have to listen to that bullshit, and here you guys are still listening to the bullshit. Stop. I'm doing it for you. I'm the fucking translator, okay? We have old ass, good traders, but they don't know how to speak to people who are beginners with this shit, and they don't know how to simplify the shit. I'm the middleman. I can understand them, and I also understand you guys because I was in your guys' position a couple fucking years ago. And I was able to make this shit work. So I know what you guys need in order to make this shit work. So please, stop listening to the old ass fucking unks that be using big ass words to try and explain shit to make you feel dumb. You don't need to listen to that bullshit. I'm here to make shit easy for you. Let me make shit easy for you. Hopefully this video helped. Again, if you guys want like way more in-depth coaching on this, okay, there's going to be a link in the description so you guys can be a student of mine. Join the day trading blueprint. Again, we're averaging literally like 3 to 4 funded accounts passed per day in there. It's absolutely insane. If you guys want to see, I have literally 3 highlights on my Instagram story that show like literally all the fundeds that get passed on a daily basis. Follow me on Instagram so you guys can see all those funded accounts getting passed. Look at my story. Proof is in the fucking pudding. Proof is in my students. Proof is in the charts. I appreciate you guys. I'll catch you guys in the next one. Peace.